Hello and welcome to our Q1 2025 video update. I'm Mark Kinney, Chief Investment Officer at Newport Private Wealth. If the first quarter taught us anything, it's that predictability is no longer the norm. From shifting trade policies to market whiplash, volatility was a defining theme. Through it all, our investment committee has remained focused on what we can control, protecting your capital and seeking opportunity where others might only see risk. During the quarter, we made several key investment decisions. We allocated $90 million across public and private assets, and we increased cash reserves to maintain flexibility in a changing environment. You'll find a full breakdown in your quarterly statement package, and I encourage you to review it. To give you a closer look at the thinking behind our strategy, you'll hear from two of our investment committee members, Smith and Jansen Shrubb, and our Head of Wealth Planning, Evgeniya Pollock. They'll speak to the core Newport principles guiding our decisions, the role of alternative investments, the value of consistency in volatile times, and the importance of staying the course to achieve long-term planning results. Let's get started.
I'm Kyle Smith, a portfolio manager at Newport Private Wealth. I wanted to tell you why Newport has become a leader in alternative investing within the Canadian wealth management industry. Experience matters. Since inception, Newport has been investing in alternative asset classes. This strategy has its roots in our team's unique and varied professional experiences that each individual brought to the table when they joined Newport. Alternative investments may be the latest buzzword, but it's an asset class in which Newport has more than 20 years of success. Relationships matter. Newport partners with best-in-class institutional managers from around the world. Our extensive track record and respect within the industry puts us on radar screens, opens doors, and presents opportunities. We are invited to participate in investment ideas that are not typically available to most individuals or firms. Size matters. With $6 billion in assets under management, we have become a force to be reckoned with. Given our size and status, we are sought out as a partner, providing Newport with the luxury of choice when it comes to assessing opportunities. The ability to make multi-million-dollar allocations is a barrier to entry for most investors seeking a foothold in the institutional alternative investment universe. Newport faces no such barrier. Due diligence matters. We seek out the best managers in each asset class, going through an extensive due diligence process to handpick each one. We start by narrowing the field to best-in-class candidates and then evaluate every aspect of their business. Lastly, we simulate returns with our existing managers to determine the optimal mix and fit. Once we select a manager and his performance is proven, we grow our investments with them over time. Independence matters. Newport is built upon the premise that we best serve our clients by making geographic and asset allocation decisions. From there, we identify and allocate capital to high-quality specialty managers. This affords us many freedoms. Our opportunity set is infinite. We can go anywhere and invest with any firm that meets our elevated standards for partnership. Our process eliminates the conflicts of interest embedded in other wealth management firms. We are the proverbial queen on the chessboard. We can move in any direction. When an investment opportunity has run its course, or if a partner is not meeting our expectations, we can take back our capital. If new opportunities arise elsewhere, we can pivot. Our investment strategy drives decision-making at Newport, unencumbered by the need to manage internal managers and resources. In short, Newport brings unique levels of expertise, relationships, and experience to the alternative investment landscape. We are intentionally designed to maximize opportunities, independence, and flexibility. All of this gives our clients the highest quality access to the alternative investment landscape.
In the world of investing, not all returns are created equally. I'm Jansen Shrubb, a portfolio manager at Newport. I'll be talking about the impact volatility can have on your wealth. For example, an average annual return of 7% with low volatility could result in a different outcome than an average return of 7% with high volatility. You may be thinking, why would volatility matter? In either case, would I not end up at the same destination? Perhaps, but the journey does matter. To illustrate why, let's compare the experience of two people who each start with a $2 million portfolio and withdraw $80,000 from it every year. Each portfolio delivers an average annual return of 7% over 25 years. The portfolio of investor A has a volatility measure of 20%, reflecting more dramatic ups and downs. Meanwhile, investor B has a much lower volatility measure of 5%. This reflects more steady returns with lower peaks and shallower valleys. At the end of 25 years, because of that volatility, investor A has a 27% chance of running out of money. On the other hand, investor B has virtually no probability of outliving their capital, even though they both earned an average rate of 7% over the time period. Volatility can be even more harmful when investors are faced with expenses that arise unexpectedly. If your portfolio is in a significant down position, while you are faced with unforeseen health expenses or you must repair damage to your home, you may be forced to draw money out of your portfolio. That can lead to a significant impairment of your investment capital. The more an investor expects to draw on their portfolio, the more important it is to lower the volatility in that portfolio. That can safeguard against those unplanned circumstances and protect your wealth in the long run. At Newport, our primary objective is protection and preservation of capital to ensure our clients can sleep through the night knowing that the foundation of their financial plan is rock solid.
I'm Evgeniya Pollock, and I'm the head of the Wealth Planning Group at Newport Private Wealth. Current economic and political events have definitely been top of mind for many of our clients. One client has recently asked us, how do you account in your retirement projections for current events? And that's an excellent question. In addition to being a certified financial planner and an accountant, I also hold a master's degree in economics. And it's that background that drives me to dig deeper into what's really happening behind the headlines. Because when someone asks about their financial plan, they're not just wondering about interest rates or inflation. They're really asking, how do we navigate unexpected events like tariffs, trade wars, and global uncertainty? When I take a closer look at the new US tariffs, at first glance, those numbers seemed random. But it turns out there's a simple formula behind it. In many cases, the dollar value of the reciprocal tariffs is roughly equal to the half of the US trade deficit in goods with that country. So it's less about tariffs and more about trying to reduce overall trade deficit. The idea is to pressure that country to buy more US goods and reduce the imbalance. But even that formula hasn't been applied consistently, and that's the bigger issue. When this policy shifts so often and without clear patterns, it's really hard to understand the long-term impact on the economy. So what does all this mean to your investments and to your retirement plan? As we have all seen now, events like tariffs can rattle markets, disrupt pricing, and push up inflation. All of this can affect your portfolio and your standard of living. That's why long-term planning is so important. We don't just project based on a set of general assumptions. We stress test plans against uncertainty and help clients achieve their specific goals, like keeping enough liquidity for short-term needs, so they don't have to sell investments in a down market. While we can't control what's happening in Washington or Beijing, we can control how your financial plan responds to these changes. That's the value of a disciplined and forward-thinking financial plan.
As we wrap up, I want to highlight the deliberate and proactive steps we've taken across asset classes this past quarter. We are most active in bonds, increasing exposure in anticipation of lower interest rates. We also added to private debt, selectively invested in public equities, and made smaller moves into private equity and real estate for added diversification. These actions reflect our disciplined, diversified approach designed to grow and protect your wealth no matter how unpredictable the environment. At Newport, our focus remains on helping you reach your long-term goals with clarity and confidence. We deeply appreciate the trust you place in us, and we're always here to answer any questions you may have. We hope you enjoy the warmer months ahead, knowing your wealth is being thoughtfully managed and well protected.